I got into trading like everybody else for the money. And in my first year, I put 40,000 into an account, took it up to $250,000 and then lost a lot. If I hadn't have grown a passion for it, I'd have just walked away there and then. Even to this day, it's the mental challenge for me, which is so, so important.
What would be the one thing that you think traders should focus on? What would that be?
I've done a lot of these trading challenges since 2013. There was a couple of events. Like I said, you go through milestones in your trading. So 2013 was the first ever 6-figure individual trade. I met a broker who dealt with high net worths and small money managers, sort of who were managing up to 10, 20 million. I remember asking him, of all the traders, money managers you've met, what is it? What's the defining characteristic? What's the secret sauce that you can see? You're seeing their trades. What's the secret sauce? And he said, the very best traders, they
Number one podcast in the trading space, the fastest growing, and that's thanks to every single one of you. Welcome everyone back to the Words of Rizdom podcast. We are back once again, still the number one podcast in the trading space, thanks to all of you and our incredible guests. The podcast where we help you get funded, more capital, more consistent, more profitable, more clear on your trading. And again, that's thanks to all of our incredible guests sharing incredible insights into the trading journey and their trading journey more specifically. Talking of which, we have an incredible guest today. I've actually seen his content online for a long time. I've been wanting to get him on for a while, and we finally made it happen. And he was featured in the BBC documentary, Traders Millions by the Minute. He is the 5-time undefeated, I never thought I'd be able to say something like this with a trader, but 5-time undefeated live trader at the
London Forex Show.
Yeah, perfect. And we'll go straight over to Charlie Burton.
Well, thanks for having me on.
It's my pleasure.
Yeah.
I'm sorry we're in this sauna today.
Undefeated, it sounds like a boxing match.
That's why I was excited to say it. Yeah, I saw that. I was like, yes.
Well, they were head-to-head like boxing matches, I guess.
Any trash talk?
At the time, yeah, but not now. We won't go there.
That's great, but incredible journey. I know you went full-time officially in 2001, so we're talking about 23 years of full-time trading.
Yeah.
Absolutely incredible. And I know, a lot of people wouldn't understand the insights that can bring in terms of just generally the experience of that length of time, but also different market conditions in market environments. Where should we start off? I think if we can go into just a very brief background, because there will be people who don't know you, there will be people who do. So just a brief background of you getting into trading, maybe even why trading in the first place for yourself, especially for so long.
Well, it was a funny thing, actually. I never meant to get into trading. Don't get me wrong. In the late 90s, I started my career in financial services anyway. And so share tips were going around anyway. And I never forget investing 10,000 in a tip from someone who knew someone, and that's the way it went. And I think it turned into 40K. And I was thinking, I like this. But anyway, I didn't, that was it. That was just being part of being in financial services, and people in the city were sharing tips. And then I used to deal with independent financial advisors, IFAs here in the UK. So I used to advise them on our pensions and investments and all that sort of stuff. So when they're seeing their customers, they could pass on that knowledge onto their customers and make decisions on hopefully using my company's products rather than one of the other investment houses' products. And anyway, one of my IFAs said to me one day, he said, I've got 2 tickets to go to this trading show. This is in 97, something like that. He said, do you want to come? I'm like, yeah, I've always been interested in trading. I've bought and sold a couple of shares here and there, but didn't know what I was doing, and that was my introduction. So into trading, it was purely luck and interest at that time. And so went on this, it was basically a 4-day course learning how to trade options in America. And so that was my fairly basic, but at least I understood what an option was by the end of it all and all of that, and some basic technical analysis. And that was my introduction into trading. But I never meant to become a full-time trader. Even after having done that, I saw it as a way to make some extra money with my investment capital on the side of my career because I loved my job. So I know a lot of people get into trading because they hate their careers. I was not like that. It was just, I stumbled across it, thought I really enjoyed it, but I loved my job. But fast forward to November of 2001, which is when I left, financial services. I still loved my job, but I was burning the candle at both ends. So I was competing for England at karate at the time.
Oh, wow.
I was just having a chat with your owner downstairs. And but it was expected that you're entertaining your clients, my IFAs. So I'm always out entertaining. And it sounds like, this is a hard luck story, but I was getting tired, and I was trying to be fit and healthy on one side of things for the martial arts, but on the other side of things, you're eating out all of the time. Yeah. Of course, you're expected to have a glass of wine or two, and all of that. So I had this big conflict, and I felt life was out of balance, and it just so happened that I'd been trading for 4.5 years at that point. I thought, well, let's see if I can make the transition from being a part-time trader into a full-time trader. And that was how it happened. So there was no set, I never intended to do it. It was just where I'd got to in life. And I thought, well, if I can trade and just be at home, then I can train, and I'm not doing all the other stuff, the entertaining and all of that. I can be fitter and healthier for all of that side of my life. And basically my life went from being completely out of balance this way. So great financially, working in financial services, but health was suffering. I say suffering, but I couldn't be as fit as I wanted to be. Yeah. To then the pendulum swung, and really busy in your career. And one thing that I'd never prepared for going full time was just sitting there at home in front of some screens. Yeah. And that's just you. No phone ringing, no going out to meetings. And so for the first 6 months, it was a massive adjustment for me from being busy to then basically feeling guilty all of the time, feeling like people are seeing my car on the drive and why has he not gone out to work today or tomorrow or the day after? And certainly personally felt a bit guilty. But it took about 6 months, and then you sort of adjust. It's amazing what the human body and brain does. It just adjusts. And so went through that adjustment. I'd given myself, I think, between a year, 18 months. I thought, well, I'll give myself that long. If it doesn't work out, I can still go back into financial services. But anyway.
Here you are.
Here I am now.
Here you are now.
Yeah.
In terms of that period of time when you were trading for like 4.5 years before going full time, was that options?
Buying shares and options. So I was literally buying physical shares, US shares, stocks. I'd started writing cover calls against them. So that was the option element. So I was buying, however many shares, writing cover calls against them. And then I started going into just, buying and selling calls and puts directly. So, a bit of that. But then I moved away from that once we got into the early 2000s, once I discovered things like spread betting and CFDs and, this is quite interesting, this tax-free option, still leverage. At the end of the day, if you're trading options, you're trading leverage, no different to a CFD or a spread bet like we have here in the UK. So then I moved away from options and just doing that.
And what would you say the transition, when you made that transition, what made it work for you?
Luck. I think that in my view, everyone needs a little bit of luck here and there. Doesn't matter what your career is or what your endeavor is. And I think that I look at it that way, that when I went full time, I'd already discovered, I'd noticed, and it's such a basic thing these days, but you've got to think, this is back in 2001. Yeah. Okay. There's no social media, the internet's there, but there's nothing really being shared at that point. So just as a result of sitting there and studying the charts, I noticed on the QQQ, the NASDAQ ETF, that it gaps a lot. And so, but it also fills the gaps a lot. This is just what you notice as a trader. Of course, there's so many strategies for gap filling and stuff these days. So I devised a little strategy and I was using options at that time actually, for trading the opening gap about half an hour after the gap or after the US Open. And that at the time was like an ATM, 3 days out of 5 it would happen, or or more than that, probably 4 days out of 5 it would happen where it fit my rules criteria, and probably 3 out of 5 would be winners, so to speak. And I look back and think, if I hadn't have had that, would I have made it as a trader? Because it gave me that staple. You know, although I wasn't taking money out of my trading account at that point, because what I'd done is I'd got money in my trading account and I'd put money in a bank account to pay myself a salary. So I wasn't actually under pressure to make money, but at the same time, I wanted to see results as a short-term trader at that stage. So that gave me like a foundation, so I could then go and explore with other strategies and all of that. So I always think that, yeah, you need a little bit of luck, but maybe something, if it hadn't have been that, it would have been something else. I don't know. But yeah, so, but I quite like to share that story because I do think that all the way through my trading, there have been times when I look back and think, oh, that was a bit fortuitous there, wasn't it? You know, so it's not always like you know everything and you've got everything lined up technically through a certain stage. Like you said, you know, I've traded through the financial crisis, through the bear market of 2000 to 2002, and obviously and beyond to the current day. So I do think that there are times when I think I've been lucky. I was in the right place at the right time to acquire knowledge or experience.
In terms of that, so you mentioned like having the rules to be able to enter a trade. Was that something that you had picked up on that options course, or was that something you'd picked up along the way, or was it something that kind of just made sense to you as a trader? No,
just looking at the charts, I'd noticed that if you got a gap back then, and I don't trade gap strategies now. I'm not an intraday trader anymore, even though I know you kindly talked about the live trade-off series that I'd done, but and I can explain why and talk about that. But just by looking at the charts, and you'd see a gap. And so what would often happen is you'd get a gap, and quite often it'd be a gap and a bit of a run. There'd be follow through from it. So I'd have to wait for and have some rules as to, well, okay, that's gapped. And if it runs a bit, I need to have some rules around, well, where's my exit and all of that to give it some room to breathe and, you know, and all of that. So it was purely just devised from just looking at the charts. First of all, identifying, there's these gaps here, and quite often they fill. But as you know, you can see a pattern in the market, but it's not always actually profitable to trade it. So you can see a classic example is you could see something that happens 90% of the time, but the risk reward profile is so bad, you're never going to make any money with it. So it's one thing seeing a pattern, another thing actually creating some rules around it where it can actually be profitable. So yeah, that just came from looking at the charts.
No, definitely. And in terms of the live trading series, the head-to-heads, well, where did that come from? Because I know, like you said, you're long-term trading now, you're swing trading now. Yeah. But back then it was more sort of scalping, day trading, right? Let's take a break for a minute there, guys, because I want to tell you about the #1 prop firm in the world, and that is Alpha Capital. Let's get straight to the point. You want a prop firm that consistently pays out, that has its own strong infrastructure, meaning its own technology and its own brokerage, which means that you get the best platforms to trade on, as well as having institutional experience as its founders and leaders. Now, let's just quickly look at the Discord here for the payout proofs. You're talking 6 payout there, 7 payout there, first payout. Look at all these payouts in the Discord. Make sure you go check that out. Now, you can get 20% off all your challenges with Alpha Capital using the code RIZ. That's capital RIZ. 20% off thanks to the podcast and thanks to Alpha Capital. Go secure your challenge today. Now, Alpha Capital has also joined the future space. Alpha Futures has launched and is here today. Now, they are revolutionizing the space by offering the very best drawdown in the entire industry, including the 100K accounts and 150K accounts that they offer, and that's at 4%. Absolutely insane. On top of that, Alpha Futures does not trail your equity high or low for the day, meaning that if a trade goes back to break even, you do not have a chance of losing your account because of that. That's thanks to Alpha Futures. On top of which, they have no buffer zones or 60-90 rules on withdrawals like other prop firms in the future space have. Alpha Futures is here to revolutionize the space with the same team behind Alpha Cap. So make sure you use my code again, RIZ, all capitals RIZ, for 20% off your futures challenge. The links for both the cap and the futures will be in the description below. Check them out. Secure your challenges with the very best. Alpha, Capital, and Alpha Futures. Now let's get back to the episode.
Yeah, I mean, I was doing both. The only time I stopped swing trading was really through the financial crisis, because the ranges went and the volatility went off the scale back then, and you were trading through there.
No, I wasn't trading. I started trading in 2016.
Oh, okay. Okay. So, I mean, if you take something like the euro dollar contract, that went from an average of sort of 60, 70 pip average daily range to 300 pips.
Yeah.
So it was massive. So I scaled back on the swing trading and was doing a lot more day trading then. But outside of that, I've always done swing trading as well as day trading. But day trading is just, in a way, I know a lot of people are more interested in it because it feels like you're doing something. And I think that's comes back to us as human beings. We like to feel like we're sat at our desk in front of our screen. Well, we've got to do something. We can't just sit here staring at and just watching it all go by, So yeah, I carried on day trading right the way up till probably a 2 years or so after you'd started. But yeah, at that point, how did it come about? I used to go to these trading shows, World Money Show, all these Forex shows, and mostly here in the UK, but I've been to some internationally as well. And so whenever I used to go to a show and they'd ask me to do a presentation for an hour, a lot of the time I would just say, is it okay if I just trade live in front of an audience for an hour? Because I would rather trade live back then and just talk through what I was seeing on the screens for an hour rather than putting a PowerPoint presentation. And I used to get bored of, I still have to do that because I get asked to do presentations, but I'd rather just talk through a live chart than actually go for a slideshow. So I used to do that. And I said to the organizer, why don't you get some, traders who have got a trader profile and we'll do like a head-to-head. I said, it'll be fantastic. We'll do it over 2 or 3 hours or whatever. And the audience will love it. The people coming to the show and stuff, because people are always fascinated by seeing two traders, trading off against each other. Yeah. And she went, that's a great idea. And so the funny thing was, most trader educators did not want to get involved for obvious reasons. Anyone who doesn't know, most trader educators, are not. They're great educators.
Yeah.
So, but anyway, we did, and so and then it was funny actually, because that first one was, I think, in 2014. I think it was, and might have been 13, 14, and then so that was already booked in for the February, and it was in the January that Lisa, the organizer, and I still know Lisa to this day. She still organizes trading shows and stuff. She phoned me up and she said, oh, look, the BBC have been in touch. They want to come and film the show. She said, would it be all right for them to film your live trade-off? And it was in a big theatre with 300 seats. So it was a big event arena there. And I said, yeah, fine by me. Tom Hugard was the guy I was trading against. So yeah, and at the time in that first year, so Tom was obviously fine with it. So she said, would it be okay if the producer phones you up and just has a chat with you? I said, yeah, of course. So I think she phoned me up that same afternoon and we're just having a chat. And then before we knew it, we're an hour into having a conversation. She's asked me a few questions and we're just chatting like I'm talking to you now. And she said, would you like to be in this BBC documentary that we're actually doing? She said, we've already filmed the professional leg of it, so to speak, because it came in 2 parts. There was the city part, and then there was the retail trader part. So they dressed me up as a retail trader, really. So that's the role. This is what I realized, is that you do these things and then you realize how much editing goes on and all that stuff. You're like, blimey, even with the BBC, Anyway, they wanted to. They found a niche and they wanted to create this character of who Charlie was, sort of thing. So I said, yeah, sure, I'll do that. And so I think I spent about 5 days with them over a period of 4 or 5 months on separate occasions. And they came to the house and they filmed me trading there. But the weird thing was with the documentary is then she's like, because I was into my fitness and stuff, and she's like, we want to film you going out for a run. and we want to film you in the gym and all these things. And I'm like, yeah, but we got all this great footage. You know, you've all these trading questions. She said, yeah, but it's still a lifestyle show. She said, people will get bored. People who watch the BBC don't want to just watch you trading and talking about the markets, you know, and you realize, oh, okay. So, and that was how it panned out. So most of that documentary was me with my top off, or, you know, in the gym, because I was doing a photo shoot at the time, it just so happened at the time. And anyway, or, you know, there was, you know, the bits of me trading as well. And I was fortunate, again, you got the cameras there. And so on the first day they came in, and I think I made 700 quid in the morning. And I'm thinking, phew, that was lucky, wasn't it? So again, talking of luck, you know, and so I'll always see it that way, because as you know, in one given morning or one given day, even if you're day trading, well, you know, it's the lap of the gods whether you're going to be profitable or not. All you're doing is following your system and your approach. So on that given day, I could have lost money, you know. I'm always quite pragmatic about that, but of course they grab the reel and, you know, and edit all that. Yeah, Charlie made 700 quid that morning, but I could have said, well, yeah, well, come yesterday and see what I can't remember what I did the day before, but you know what I mean. You know? So you want to be that much more humble, because that's the reality of trading. It's not, you know, making £1,000 a day every day and all of that stuff. So. But they're going to edit the way they want to edit. So anyway, so coming back to, sorry, I'm going all the way around the houses here. Coming back to the live head-to-head trade-offs, they came about as, it was my idea, and then we did that one that first year, and then it went down well. So we did it 5 years. Well, I say we did it 5. It went for 5 years, and then she was struggling to get people to trade against. You know, the people that did it, but as far as getting more people, it was tough. So it just came to an end, and I was quite happy to bow out being undefeated.
100%, I bet.
I was thinking, phew, don't give me anyone else. I'm going to lose at some point, you know. So
do you feel like it was a good combination of like the karate background, bringing it into the trading space, like the versus, the arena?
Competitiveness, the competitive nature, yes. But I think with the martial arts, like boxing, I was chatting downstairs with the owner here of the studio, and he's your business partner.
Yeah.
And so obviously he's massively into it as well. I've long since, you know, finished injuries and all of that. But one thing, whether you're a boxer or martial arts or anything physical, rugby, I'm a big rugby fan. You've got to pick yourself up after you get dusted, you know, and that, I think, when I used to go and train with the national squad, and it doesn't matter how good you are, and I was not the best, but I was good enough to be training at these places, you're going to get a kicking. And so you just get used to having to pick yourself back up. And I think that was probably one of the biggest mindset attributes that served me well in the early years. Because in the early years you are going to get kicking, and that's why mindset, you know, is everything. And, you know, that's why so many people quit, because they just haven't thought about or embraced the mindset side of things. They just think that just give me a good strategy and I'll be all right, you know. And well, it's a bit more than that.
Yeah, an analogy I like to bring towards martial arts, boxing, karate, taekwondo, MMA, whatever it may be, is like when there's a few actually that we can even talk about. Is like you say, most people quit, right? Because of the psychology and the mindset, it's not prepared. But most people can't handle, let's say, they don't take risks generally, you know, just in any way. And most people can't handle chaos. They can't handle when loads of things are happening at once, and to be able to stay calm and focus. And I always bring that analogy back to martial arts in terms of, one, you're obviously taking the risk to go into a fight, and you don't know the outcome. You don't know how good the opponent may be, or if you make a mistake, etc. And then all that chaos is there, especially if you're doing it in front of a crowd, right? There's all the sound of the crowd, but you need to be locked in and focus on what's right in front of you. There's the sound of each corner shouting at you. There's the cameras, the lights, the music, whatever. And you, as a fighter, have to be focused on your mission, your target, your strategy, right? And I always bring that to trading in the sense that it's a very similar aspect of when you get on the charts, there's so much happening, right? There's all the different time frames, there's all the noise on social media nowadays. There's all the different indicators you could use, all the different strategies, all of this is happening while you need to be focused on, as you said earlier, like your strategy, your edge. And I always find it interesting. So you think that mindset of just risk and dusting yourself off, like being open to, yes, you may have got beaten or taken a loss in that time, but then you just move on, you move forward, and you learn from that and get better.
I think some people are naturally got that, but for most people in trading, as you know, is unnatural. You're having to do things which go against your core DNA, fight or flight responses. Most of us, our fight or flight responses would have us running half a mile away from the markets after our first loss, sort of thing. And so absolutely, that background certainly helped me to have the tenacity to keep going, because you've got to when you are being kicked on the floor by four guys, because that's what we used to do. We used to do 4-on-1. When you're absolutely shattered, oh right, we're going to do 4-on-1 today. Great, and so you got no chance. And so it's just about how you deal with it. And it's exactly the same with trading. It's about how you deal with the loss, the losers, the drawdown period, whatever the market's going to do, how you deal with even missing out on what becomes a great trade, the whole FOMO thing, but the missing out, and because so many people will get frustrated. So the range of emotions is huge. And so I always talk about, having to desensitize that range of emotions. Otherwise, our natural emotional responses to trading will be like this. And what we need to do is get it down like this, like a ripple. You hear people say, the late Mark Douglas used to say, trade without emotion. And I don't believe that's completely possible, because we are human beings after all. So I think, a desensitized ripple of emotions, because you're going to feel it. You're still going to feel it if you've just gone through 10 losses in a row, or whatever the emotional trading environment that you've just gone through is. But you just get better at dealing with it. If you think about it, if you consider the mindset, and it was no different with back in the days of doing martial arts. The amount of people, at one point I was training with a world champion down in this dodgy little back, a hall in Luton in the UK, and it was brilliant. The training was awesome, and there was like 5 of us there every week. This is the world champion. No one was turning up, and no one was going there. And we're all black belts, and it was just because it was what it was. You always walked out with an injury at the end of the session, but they were the best training days of my life. But for a lot of people, they're like, no, coming back to what you've just said, oh no, I don't like that. And it's the same with trading. So people, oh no, I don't. I've had 4 losers in a row. I'm going to park that strategy. I'm going to look for something else now. Yeah. And they become a strategy hopper. The only reason they're a strategy hopper is because of this. That strategy there might be absolutely perfectly fine, but they can't handle it. And so that to me is where most traders need to spend most of their time, not so much on the technicals. But
in terms of that, so like because you mentioned a couple there, like in terms of losing streaks, like how often, or what is the realistic nature of a losing streak? Is there any sort of average you've seen from your career of like, okay, on average, my edge will give me maybe a 10 losing streak or 5 losing streak? Or is there anything that sticks out to you? And would you say, because you've been doing it a long time now, so like, would you be able to say that you cannot avoid losing streaks? Because I know that one of the biggest problems that traders do nowadays is that they keep hunting for a strategy that has very minimal losses, like just 99% win rate. Yeah, okay, a loss here and there, but that's it. Like not on a regular basis, no losing streaks, just a one-off occasion. And I personally think that's a fantasy. I don't think that exists.
No, I don't think it does either. I've met thousands of traders probably now over the last nearly 30 years, and I don't think it does exist. So in answer to your questions, I totally understand why people seek that, because as human beings, we seek certainty. We want certainty in our lives. We go to work, and we get paid. We're certain that we're going to get paid at the end of the week, the end of the month. And we go into we go to trading, and there is no certainty that we're going to get paid. And so what people try and do is they adapt their approach to try and create as much certainty as they can, and so therefore high win rates. There was a study, you've probably heard this, I think it was 2016, one of the big brokers in the UK did a study of their own book, and what they found was their book of clients on average had a 64% win rate, and yet 75% of their clients were losing money. So when you think about it, if you've got a 64% win rate, but 75% of them are losing money, what it tells you is that they're all trading with, or I say they all are, a lot of traders are trading inverted risk rewards.
Yeah.
So they're right more often, but so they have lots and lots of little winners, giving them the 64% on average win rate. But then when they go and have the big losers, they're big.
Yeah.
and it puts them on the back foot. So we see that sort of thing a lot, and it's natural, but it's something that I think I was like that when I started trading, because that's what we naturally want to do. But as we grow as traders, if we can get past that first 3 months, 6 months, year, then gradually we build a thicker skin towards the rejection that the market is giving us constantly. The market's constantly probing. That's how I describe it anyway. I describe it as like the devil, literally trying to probe you and nudge you and push you in the wrong direction. He's trying to put you off. And if you recognize that, then it stands you in better stead. So coming back to drawdowns, it's a different thing, because I think most traders evolve. You're probably a different trader today than you were in 2016 or 17. So am I. So the trader that I was, even in 2014, 10 years ago from when we're recording this, when I was doing the BBC and that live trade-off series, most of the techniques I use today are the same as then, but I'm not doing any of the day trading. So the trading has evolved again, and I try to hold on to my trades for longer and longer and longer periods now. So what I've done is embraced lower win rates anyway, being wrong more of the time. For when those few bigger winners come in, I really get a lot of personal enjoyment from that. So my drawdown periods have changed over the years, from when I was mixing swing trading with plenty of day trading, to now where I'm only swing trading. And if I'm looking to be in positions for a month, 2 months, 3 months, then I've got a lot of delayed gratification I have to go through. So I'm not there placing a trade now to get out in 2 hours time or 10 minutes time. So my drawdowns therefore are correspondingly longer in duration, in time duration. Doesn't make any difference to profitability overall, but I've moved on, and I don't need the feedback, that constant feedback loop that another trader might need, because I've been through all of that, and it doesn't matter if I don't get paid for 6 months. But if in 6 months time I have a winner that makes up everything that I've just not made anything up prior to that, but then that single trade makes me my year's gains, I'm happy. Definitely. So it's a different world that I inhabit now.
What was that transition like though? Because I recently, last year, I was scalping for the last few years. Originally when I started out I was swing trading, then I went to scalping.
I think that's probably the better way.
The scalping?
Swing trading first.
Okay.
Then
yeah, I think so, because then you do it right, like from higher time frame down. But then now, thanks to the pod of how busy I am, I transitioned back to swing trading. But there was this period, I think I'm getting more used to it now, but there was this period just recently where it was like I was struggling to hold the trades, and then also struggling to not cut the trades, and then holding them too long, if that makes sense, where the market's kind of told you. So I went into this period where it's like I was winning trades still, but I wasn't like maximizing the trades, and I definitely wasn't being efficient, because some trades I wouldn't hold them long enough, because I was just in that scalping, like you said, that feedback loop, and that sort of like you're used to being in and out, and you like that because you're getting paid quite quickly.
Yes.
And you're getting this feedback quickly. But then equally, when I was like, okay, you need to start holding, I would hold, and then I'd have like good size, good profits, and then it would all get wiped out because I just wouldn't close anything, or I wouldn't recognize that, hey, we've rejected this level or whatever it may be, and then I wouldn't close, and it would let it all go back to break even. And then in the end, I wouldn't really feel any kind of way because I knew I'm trying to sort of get used to the swing trading style a bit more. But equally, it's like there's this period and transition. Did you feel it? I know you said you were doing day trading and swing trading same time, so it might have been slightly different. But was there a transition where when you went to purely swing trading where you found yourself?
Yeah, I think that was about pretty much 2018. You know, really that was the main thing. And I've done a lot of these trading challenges since 2013. So 2013, I decided to just put it out there, do some challenges just to show traders what can be done, sort of thing. So, when I did those challenges, when I was looking back, because these trading challenges would be over 2 years, 3 years, and I'm doing one right now. So, because I wanted to do it over a significant amount of time to prove that it was more than just luck, sort of thing. You know, anyone can do something over a month and could get lucky or whatever. Yeah. So, one of the things that I noticed when I did the first challenge there, so I'd finished that in 2015 or so. When I look back at all of the trading, both swing and day trading, the bulk of the profits in the challenge were actually from the swing trading, because partly there are reasons for that. One is I would take bigger positions on a swing trade than on a day trade. Okay. The nature of the noise that you get intraday, then I would always be trading smaller risk per trade intraday. Yes, you're doing more frequency, but I would still be at smaller risk overall. So, but when I looked at it, that was an eye-opener, another eye-opener to me. There was a couple of events. Like I said, you go through milestones in your trading. So 2013 was the first ever 6-figure individual trade. Wow. So that was a milestone. Like, right, there's something in this, holding on to trades for a bit longer as a swing and adding into them. So I met a broker, a specialist, a boutique broker who dealt with high net worths and small money managers, sort of who are managing up to 10, 20 million. And at the time they wanted me to trade through them. And so I was having a couple of meetings with them and stuff. And I remember asking him, of all the traders, money managers you've met, you know, what is it? What's the defining characteristic? I'm going into, we're talking about market wizards just a minute ago. I'm going into Jack Schwager mode here with him, saying, you know, what's the secret sauce that you can see? You're seeing their trades. What's the secret sauce? And he said, the very best traders, they milk a trade for all they can. They rinse it for all they can, and they add to those winners. Now, that was back in, 2007, something like that. I was talking to him. And that went in one ear. It actually must have stayed there, but it went out the other ear. as in, I wasn't ready as a trader to be that kind of trader at that stage in my life. Yeah. So it was interesting. I'm like, okay. And that was it. It was parked. And it was only by the time I'd got past the financial crisis, so we get post 2010 really, and the markets have settled down. Then nice volatility. It was a nice few years, and then then gradually this sort of stuff came back to me. That conversation came back to me, and so I started. Okay, I'm doing swing trading anyway. Well, why don't I? If I'm in a bit of profit, add here and there, and it's so uncomfortable. When you first start doing it, it's really uncomfortable. Market goes up. You're just at that point where you mentioned earlier on, maybe it stops at break even now. Oh, it's a risk-free trade. Yeah. And no, you got to now put a new position on so you don't ever get to risk-free, really, because you're always doing that. So I had to, at that point, probably 2000 and I don't know when I started doing it, 11, 12, that was me going outside of my comfort zone. So I've always liked to push myself outside of that. Day trading was firmly within my comfort zone. And short-term trading, where you just in a trade, get to a certain level, bank half, see if you can run the following half, manage the rest. That type of trading. Yeah. Whereas I always wanted to be uncomfortable. Coming back to what we were talking about earlier on about martial arts and stuff, and being used to being, sometimes I'd rock up at martial arts clubs in London and Birmingham and stuff, and they weren't my clubs, and I'd rock up because I just want to go and train with the instructor. And just walking in the door would be nerve-wracking because you know that they're going to see you come in the door as a black belt, and you've asked for permission to come and train with them, but I knew what they were going to try and do. You're going to try and kick you in because you're some outsider, or and so I guess that's always been there when it comes over to trading, that I quite enjoy pushing myself, and pushing the boundaries a little bit. So it was certainly a transition. It's not something that happens overnight. You need a few confirmations along the way, like you've been in some nice profitable trades. Yeah. You need those confirmations to help you, and it takes time. And when it comes to trading, there's no substitute for time. I know everyone wants to be rich in 6 months or whatever, but time is everything, as you know. And so that was it with that. So that transition is probably still in progress right now. Yeah. Really, I don't know the trader I'm going to be in another 5 years. But certainly from over that last 10, 12 years, that's the transition that I realized that I can be just as profitable. Coming back to what you've just said, time becomes important. I can't sit in front of the screens all day long anymore. Yeah. Busy, and so, and you, again, it comes back to finding a balance in your life. But when you realize that you can make just as much money, all right, it's in a more staggered approach. You're not doing it every day or even every month. But when those big wins come through, they make your 6 months or they make your year. But there's a lot of delayed gratification. But once you start realizing that, or that's what I did, I realized, okay, as long as mentally I'm okay with not making money for, months at a time at times, then that's fine by me.
You mentioned the trading challenges there, and I think we should definitely bring that up because a lot of people try and use, as you said, like what we see people doing them, whether they're actually doing them or not, we don't know. But let's say they do them, but they do them always in like a month or 3 months.
Yeah.
And as you say, it can be luck, and it can just be heavy over leveraging. Yeah. But like you said, you which was interesting because I didn't know that point of it, which was like 2-3 years at a time.
Yeah.
But like, what sort of challenges would you be? Like starting balance to sort of end goal?
Yeah.
Let's take a break for a minute there, guys, because I want to tell you about the best trading tool on the market, TradeZella. The reason why TradeZella is the #1 trading tool that every trader needs is because you can do backtesting, automated journaling, trade replay, in-depth analytics, and so much more. And the greatest part about TradeZella is that it's all automated. All you have to do is connect your MT4 and MT5. It will pull all your data onto the dashboard. You can add playbooks. You can just add notes. You can add images from your trades, and you can get the insights that is necessary for you to progress as a trader. Now, TradeZella is for absolutely everyone. Whether you're a crypto trader, whether you're a Forex trader, whether you trade prop firms, it is for absolutely everyone. And that is why thousands of traders have signed up using my link here through the podcast. Make sure you use the code RIZ10 for 10% off your monthly subscription, or WOR for 20% off your yearly subscription. The link is in the description below. And let's get back to the episode.
The funny thing was, I was long before podcasts. No, podcasts were around then. So 2012 or so, 2013. I was asked to go just on a webinar with an American group of traders to do some interviews or whatever it was at the time. And you're always thinking, what could I do which is a little bit different? And I can't live trade because it's just an hour and a half webinar or whatever. I know. I'll set up a little trading challenge, and because they wanted me to come back and do a follow-up webinar, and I'm thinking, yeah, but you know what happens? We're in a fickle business. Not fickle, but people are skeptics. Yeah. I'm the biggest skeptic about a lot of traders out there is going, because I've seen some very high-profile names in the trading industry, and I know they're not necessarily who we think they might be. And so so I thought, well, if I do a trading challenge and then come back after a month, like you've just said, it could just be luck. Anyone can have a good month or whatever. So what I did for that group, I said, right, what I'm going to do is I'm going to do this. I'm going to see if I can turn 10K into 100K, $10,000 into $100,000 within 2 years. I'm not going to try and do it in some crazy 2 months or just go nuts, but that's still 1,000% return over growth on over 2 years. So it took me 2 years, 8 months. And I quite liked that. For one, I didn't do it in 2 years. And internally, I thought even if I'd have traded that to 40,000 and done a 300% return in 2 years, I didn't think that, so if I failed, so to speak, I didn't think that people would criticize me too badly, because it's still a 300% return, 150, let's say, per year, you know. So that was what was going on internally. But of course, once I got into it, I think you get the bit between your teeth, you know, that competitive nature comes out again. I'm thinking, oh, I've got to try. And, you know, I didn't know how I was going to do it. What I did do is break it all down. So, okay, because if you're thinking 10 into 100K, it's such a big number in relative terms as far as the percent growth is concerned, or if it's 100K into a million, you've got to break it down. So I just broke it down. Right, okay, in that first year, if I could do an average of £50 a day, and that was how I started it, and just, right, is it feasible? In order to do £50 a day, what I need to be doing is on my winning days, be making £200-300 in order to offset the losing days. Yeah. And so then that was how the plan was devised, so to speak, to think, okay, I've got a bit of a framework here, and that's how it got started.
What was the risk like on the sort of challenges? What was the mindset around risk?
On that first one, I think it was up to 2% risk per trade. Yeah. So, you know, that I always see that as quite high. Okay. So I always said, look, this is speculative trading. Most traders who are trading with, and if that's their total pot of money, I wouldn't recommend trading with 2% risk per trade. And so I made it very clear that this is a speculative challenge, just to show you what that I could do and what can be achieved. But what you don't want is someone who's trading at 2% risk per trade on their main pot of money, and long before funded accounts came around, and you know, and then the emotions are going to be that much higher when they go and have 3 losers in a row. They're down 6% and all of that. So I don't recommend that. But for that challenge, yes, because it was a separate thing. So,
what do you think in terms of risk generally, though? Because I was always like, coming into trading in 2016, the one thing I always heard to begin with was like risk 1%. Well, funny enough, the course I first learned from didn't say that at all. They were just like, risk whatever, you know, 1, 5, whatever. Yeah. So that was interesting. But generally, I knew the consensus was like 1%. That's the way. And I believed that for so long. And I understand why, and it's not wrong necessarily. But then I started listening, especially because of the podcast, started researching more, started like listening to some of the professional traders, some of the like famous traders in the world, and some of the, you know, huge profitable traders as well, who have made like tens of hundreds of millions and so on. And when I listened to them speak, they're all talking about dynamic risk. They're all talking about, you know, one, when you have, let's say, profit, using that profit to size in more, or equally when you really feel like you've got that edge and that alpha, and you've really, you know, that experience or that intuition is really talking to you. And as you kind of pointed to at the beginning, like, look as well, like when you feel that, size in, right? And then that's where you can make those big returns. So I always found it so interesting. I was like, okay, maybe there's something different. And I remember some people would talk like that, and they might look like the influencer type on social media, right? But they would talk about like, I don't want to risk 1%. That's not how you make money. And I was like, okay. Originally, I'd be like, yeah, well, you know, 1%'s the way. What are you on about? But then afterwards, I realized, okay, maybe they're not necessarily wrong. And then I spoke to Jack Schwager, Market Wizards. I asked him the same thing, and it was so interesting because he was like, "It's true. Like, you have to, if you want to make the big bucks, you have to be dynamic with your risk. But for the average trader, they should stick to 1%. Yeah." And I was interesting because I started to lean the complete other way. It was like, everyone should do dynamic if they want to make money. And then he was like, look, the average trader they can't handle it.
The average trader, exactly. The average trader won't have the mental capacity for doing that. And so it's funny, actually, before you said Jack Schwager, I was getting ready to say Paul Tudor Jones. That's exactly what he did. If you read the original Market Wizards, and that's what he did, you know, and a lot of those traders, as you just said, they would lean into the trades. If the trade was, well, there was a couple of things, like you said, they would add they would add to their winners, but also they would put their foot down on for two reasons. One, that they had that gut feel, or combined with their analysis, of course, that the heavens were aligned, sort of thing. Jim Rogers used to talk about that, the George Soros's old partner as well. And also using prior profits. So if they've had a good winning run, they put the foot down. And that, I remember reading that myself. When Market Wizards for me is the best book on trading that I've ever read. It's my favorite book anyway. Don't worry, I've read lots of interesting trading books, but that's my favorite. And Paul Tudor Jones was my hero. And he still is to this day, really. So if he's on CNBC, I'll still watch his interview if I come across it to this day, because I just like him. And so I will say to people, if someone says to me, how much should I risk? I'll say up to 1%.
Yeah.
And so I will carte blanche, because I don't know that person. I don't know what their mindset's like or anything like that. But absolutely, in order to make those bigger trades, how I trade is, you start off. I a lot of time I'll dip my toe in the water. I call it that. So I'll dip my toe in the water with a position, and then I'll build it as it moves in my direction as well. I'm not actually taking on always a lot more risk, because obviously the trade management is coming into play as well. Yeah. But that's how you make those bigger gains. Plus, like you said, if you've got the stomach for it, because some traders, they've just made whatever it is. They've just had a little run and they've made 10%, hitting the plants there, and hit me back. And they've got 10% there, but they're too fragile to be able to utilize all of that, so to speak, going into the next trade. Because if they lost all of that, that wouldn't be any good for them. So I think for a lot of traders, risking up to that 1% figure, I think is the right thing for them. But you're absolutely right. If you want to make the big bucks, one, you've got to sort your head out, get the mindset sorted, because those are the sort of techniques you're going to need to use in order to do that. Yeah.
What do you think about the sort of on the same sort of line of thought? The majority of traders would need to stick to that 1%. Do you feel like you can be a trader and you can make enough to sort of live a comfortable life, cover your expenses, replace your job, maybe a bit more as well, but not go into those sort of realms of tens of millions and like the cars everyone looks at and the watches and so on? So do you feel like people can trade and they can trade for their personal freedom? But do you feel like a lot of people maybe have a fantasy where they think they're going to be part of that 1% and they're going to be those like millionaire traders and do absolutely incredibly well, but they just don't actually understand the reality? So like when you read something like Market Wizards, you see the reality. You see like, okay, this is the mindset, the techniques, the I would say the confidence, because a lot of them, when I was reading Market Wizards, it was like they were so confident, not in terms of like ego-wise. They loved the markets and they just were so confident about their ability to continue to trade the markets no matter what. Some of them had crazy drawdowns. Yeah. And then when asked about it, they were like, no, I just believed that regardless, I will push through. And a lot of them described it as a game, right? In terms of like, this game is like, this is why we love the game, because there's always this learning, there's always this thing. And I feel like a lot of people don't have that same mentality, that confidence, or that, that they want to win and beat that game. Instead, they're just here because a lot of the time being influenced by social media of like, this is what I can do. And so the question is like, do you feel like there's a lot of traders who should probably start to be a bit more realistic in terms of, yes, they can create freedom for themselves, but maybe stop thinking about like, oh, I'm going to completely become this private jet owner and just be absolutely relaxing and having the dream lifestyle from trading alone, if that makes sense.
There's very few people that you and I will know of who are like that completely. Take the Market Wizards, for example. They were all fund managers, for starters. So they were mega successful, but they were managing money. So they were leveraging their trading skills by doing that. That's what I do. I'm a money manager as well. And so I'm leveraging my skills out to investors. So the whole private jet stuff, well, that tends to belong more so. There are one or two individuals who are just absolute superstars, but that's not even 1%. It's not even 0.01 of 1% probably of traders. So in the main, if you want that, then you're going to need to go down the money management route in order to do it, to get that leverage. You know, you may be good as a trader, but even as a very good, competent trader making X% per year, it's going to take a lot to get to those sort of levels. So the way to do it is to leverage it, manage money probably, and do it that way. But there's absolutely nothing wrong with just being a solid trader on your own money, your own account, and seeing it for what it is. That, like you've said, it's either it could be a lifestyle thing whereby you can quit your job and just be a trader, or maybe not even that. You know, again, coming back to the mindset side of things, for most people to make that transition to becoming a full-time trader with no other income coming in, it's really tough. Really, it's doable, because I've got plenty of traders I know who do it, but it's not easy. And you could just be a very competent trader on the side of your full-time job. Maybe you cut your hours down to 4 days a week or whatever. But at least you're paying the bills before you get out of bed, sort of thing. Mm-hmm. And so you're taking the pressure off yourself, because if you're putting all of that pressure onto yourself at the beginning of the month, and the first 2 days you're down, you're then all of a sudden thinking about, oh God, you know, the consequences. Mm-hmm. So when I did it, again, circumstances. I was single at that point. I had 6 figures sat in the bank account to pay myself a salary. I had 6 figures in my trading account. They were different circumstances to someone else who might not have that, you know, and they want that, but they're not in that situation. They might have 2 children, married or whatever. And all of a sudden there are consequences to your decisions. So I think there's a lot to take in. Yeah. Would I do that now? If I was starting today, mm-hmm. Now I do have a wife, or our daughter's now already left home because I'm so old, but she's 24 now herself, but round about the time when I started. Mm-hmm. But let's take it back maybe 10 or 15 years ago when Leah was younger and Rachel and would I have gone full time? I don't know if that would have been the case. Would I have taken that risk? When you're a young man with no responsibilities, it's a different world. Mm-hmm. Yeah.
No, I think it's a very solid point. Very, very solid point, because the beautiful sort of audience that we have is that it's a nice range, you know?
Yeah.
But a large portion of it being between sort of 18 to 34, I believe, from the demographic. And there will be those who have responsibilities and those who don't. And I've spoken to such a wide range of the audience, from people who are thinking of quitting uni to go all in on trading, to people who have like 3 kids and a job and trying to trade. So it's like, yeah, as you say, there are so many different factors to take on board. But I think it is good for them to maybe have a sort of sit down and think about, like, okay, I can do this trading, and trading can alleviate pressure or even be the thing that grants some freedom, financial freedom. But to understand what that end goal or picture that they're sometimes creating, because even for me, for example, you know, I had this fantasy in trading of like, once you have your first big profit, first big withdrawal, life changes. Then it happened and nothing really changed. Like, it was like, yes, I've made more money and I've got rid of some debt there, or be able to buy this or have this much savings, whatever it may be, but nothing else really changed. And it was this really weird moment where I just felt really numb or confused for like a week or two, and I was like, I didn't think I'd feel that. It felt flat. And then I realized that it was like I've just built this fantasy for the last 3.5 years of like, when I finally make this payout or this withdrawal, I'm that's it. Life will be different. And I think a lot of traders probably do that. Yeah.
I think it's like winning the lottery. Mm-hmm. You think winning the lottery is going to change everything, and actually you can feel, you hear lottery winners feeling flat afterwards. That initial elation disappears very quickly. Mm-hmm. I will get into a trade and I'll work out the process of the trade, where all my targets are, how I'm looking to manage it and stuff. And I think, oh, right, yeah, if that does work itself out, that's going to be quite a nice trade there. Mm-hmm. But when I get to the end and I talk to traders about this, usually I feel quite flat. There's no elation, and there shouldn't be, coming back to the minimal emotional range. But what I will always do, and I don't smoke, but I'll always say, well, I'm going to smoke a great big fat cigar at the end of this just to chill out.
Okay, yeah.
You've just invested a load of emotional capital in that trade, let's say, and you've got to the end, like in your situation there, and you've had a big trade there, then I usually like to take a few days off. Not that I get emotional, really. I just still do it as a matter of habit, just because I created the habit years ago, and I think you should still do it. But yeah, it's quite funny, actually. What you think is going to happen versus how you actually feel are two entirely different things. A lot of the time, it's not, there's not some, punch in the air thing going on. You're actually exhausted and you're like, oh, thank God that's over.
Yeah, no, that's very true. And I love that you brought it back to the emotional standpoint, because you touched on it earlier as well, in terms of like, okay, you put all this pressure on yourself in one or two bad decisions at the very beginning, or one or two setbacks at the very beginning, and all that pressure's on your trading. All that leads to is that spiral of then revenge trading and over-sizing, over-risking, all fear, and then suddenly you sit on your hands and you're not taking the trades you're meant to take. And as you say, like, we are human. And I think that is an important point to bring up, because a lot of people do think, or trying to chase this emotionless, robotic-like mindset, which doesn't exist. I think as humans, as you say, like, we're always going to feel something. But was there anything in particular that helped you to sort of get to that more sort of flatter emotional curve, rather than sort of the peaks and troughs that we see in the beginning?
There's a couple of things. One was actually just looking back and reviewing. So I'm sure you talk about it a lot on your podcast here, about journaling and reviewing your journal and stuff. And what I noticed was my equity curve. This was in my about 2 years into trading. My equity curve was doing this. So I'd learned enough 2 years in, but my equity curve was basically doing this. It was going up and then I was giving it all back, then going up. And most traders have gone through that. And what I found was I was always naturally a greed-based trader. So as the equity curve would grow, I'd start off being really quite disciplined, because I'd already gone through all the rubbish in the first year of ill discipline and all of that, and blowing up accounts and stuff. And then I'll get up to here on the equity curve, and then you start taking trades that you weren't taking 2 months ago. Just because of overconfidence, and you're like, well, it doesn't matter. It's just, and you start using this language. It's okay. I've got loads of profit here. It's just a bit of profit that I'll be giving back if it doesn't work out. But the problem is that one becomes a loser. And then you start chasing it, and then and then gradually it comes back down. And then what would happen was I think, oh right, I better tighten up a bit here, start trading a bit more discipline, and funny enough, the equity would go back up. And that whole cycle of it happening, because you don't necessarily have a realization after one cycle. That took me a year of just trading like that, and then reviewing it and thinking, oh right, so when I get up to here, if I stop being overconfident and basically an idiot, then I will have a better discipline, and that equity curve might just actually continue. And that was like an aha moment for me. And that really did work, just that alone, as far as reviewing is concerned. So that was one of the things. As far as trading in general is concerned, I'm a big believer in self-talk, talking out loud to you and to yourself, and talking about the consequences of your actions as a trader. So, okay, so if I take that trade right now and it fails, will I kick myself? Yeah, I probably would do. Right, there's your answer. You do not take that trade, because all trades should be good trades, whether they're winners or losers, because you should just be following your plan. You're following your method, following your strategy. So, so that should be an inherent question at the beginning of every trade. Just if you're like I was, naturally a greed-based trader, a little bit, just wanting to get on and take that. Ask yourself these questions, because you should never kick yourself for a losing trade. If it should just be a good trade that didn't work out. It's as simple as that. So there's a lot of self-talk that I use to help me, and I just still use it to this day, just because I've formed the habit of doing it. And so I still use that sort of language.
In terms of habits, I think it's so important, because I feel like a lot of people don't have the longevity in them. And I'm guilty of this even to this day, more so outside of trading than anything. But it's like, okay, you start to build a habit, a month maybe, a month and a half maybe, but then you just fall off it. And so you don't actually give yourself the chance to really form the habit that's going to give you the results you're looking for. So like with a trading plan, most people unfortunately don't trade with a trading plan in the first place.
Yeah.
The ones who do or start to try, they do it for X period of time. And as you say, that's why they stay in that what does Mark Douglas call it? The boom and bust cycle, right?
Yeah.
That's why they stay in that cycle consistently. And I was there for a long time for the same reason that I would do the exact same thing. I'd, maybe a month and a half max, I'd do well and it would go up. Then I'd do something greedy, do something against the plan, do one bad trade, like you said, it's okay.
Yeah.
Then it goes back down. And then, after a month and a half, 2 months of that, you might blow an account and then you just stay away. You don't even give yourself an opportunity to build the habit in the first place. And habits such as self-talk, for example, I think it's good because people might just assume it's just, you're just talking to yourself and something like that. But I think it's more, and you can let me know on this, is like the quality of the questions you ask yourself. And I think an emotional standpoint, that even outside of trading, that's a very powerful thing to do. Like, why did I react in that way? Why did I feel this way towards this person or this action or this traffic that I'm in, right? It's such a minor thing, but why did I react? And then once you start to do that, it just opens the door to just understanding your reactions a bit more. I guess self-awareness to a degree.
Know thyself. It comes all the way back to, Sun Tzu and I mean, it was actually as a result of, it was a psychologist, not a trader psychologist. I worked with a psychologist with a group of traders to help them. And what he said resonated with me. This is in the early, this would have been early 2000s. He said, the act of talking out loud, you fire a different neural pathway in your brain. So there's actually a physical change going on. So if you internalize stuff, so you might have that internal dialogue, but if you actually talk out loud, then it fires a different neuron. So it really is a game changer. So asking yourself these sorts of questions, quality questions, as you say. So for example, a classic is a trader's had a couple of losing trades. They hesitate on the next one. It becomes a great big winner. Yeah. So, So if I don't take this trade right now and it becomes a big winner, will I kick myself? So I can turn that other question upside down in a different and rephrase it. Same thing. Will I be frustrated if I miss out on that trade? Oh yeah, I will do. I really don't want to take it, but picture yourself into the future looking back. That future might only be 3 or 4 hours if you're an intraday trader, or it might be a few days, whatever it might be. But if I don't take this trade and if I don't follow my plan, how am I going to feel at that point? And all of a sudden, okay, I'm going to have to take the trade. There's so many different little things that you can do by asking these key questions that can really help. Because for a lot of traders, their technical approach is probably fine. What sabotages them is themselves. And like many people in life, we all have that propensity, whether it's, we self-sabotage with whatever it might be, chocolates or whatever, and so we all do it or have the propensity to one degree or another. And so for traders, then that's very prevalent, whether you are a greed-based trader or you're gripped by fear. Well, how does someone who's gripped by fear try and get out of that? Well, again, key questions, right? Well, okay, be like Mark Douglas often said, measure your success, not on the next trade, but on the next 20, 25, 30, as he used to talk about. I mean, I don't even do that. I just say 100 or 1,000 trades, because then you're properly desensitizing the importance of the outcome of this trade right now. If you say, look, this is just one trade in the next 1,000 trades you're going to take. Or again, you're talking to yourself. That psychologist recommended getting a little teddy bear, in fact. And he said, talk to the teddy. I never actually did that, but some of the traders I know have done and said it works really well. Because there's nothing better than saying, okay, if Riz was sitting next to me right now and I'm about to make this decision, would I do it if he was sat next to me right now? And it's all of these quality questions you can ask yourself, which act as arresting mechanisms or confirmations that you should be doing what you're about to do.
Because you mentioned data before that as well, and it was interesting. I did a podcast recently, and we know the importance of data. We know the importance of journaling, like collecting that data. But I feel like one thing that is so simple but yet so powerful is that once you have that data and you're able to look at it, it can give you the confidence you need as a trader if you utilize and dissect that data properly and understand it in terms of recognizing your positive patterns. Like, oh, actually on a Tuesday I actually perform extremely well. If I look at my data, it's telling me like 80% of my winners come from Tuesday, for example, random one. How much more confidence will you be then when you're on a Tuesday and you see your trade set up and you might have taken a loss the day before, but you recognize, hey, 80% of my winners come on this day. Equally, you have to be careful not to like
get overconfident.
Yeah, exactly. Right. So that's the thing with trading, and I've always said I love it and almost hate it in a sense, but more so love it. Is that trading has so many possibilities, so many options that there's no restrictions really as a trader, and that is a beautiful thing because it means that anyone can sort of be a trader, and any option or choice that you make can be possible. Equally, on the negative side, it's like there's, as human beings, when we have too many options, it can be a negative too, because we can very easily start to say, oh, we'll just try that. Let's just do all of these things at once, versus having sort of a bit more of a structure and routine. In terms of yourself, though, like what's kept you trading? Because a lot of people, I don't think they could imagine themselves trading, for a length of a career, for example, rather than just a couple of years. Some people I know get into trading, I think, for the wrong reasons, because they want to finance some other passion that they have.
Yes.
Whether it works or not, I'm not sure. But, they have a vision of just trading for, say, 4 or 5 years, maybe 10 years max. But obviously you've been trading for 24 plus years now.
7, yeah. I think that most people that get into trading who do not become passionate about trading will never last. You have to be passionate. And the reason it comes back time after time to what we were talking about earlier on, the market's going to kick you in the teeth. And it's going to that devil is constantly going to bully you and push you around and shove you on the floor and everything else. So if you don't have a passion for trading, you're not going to last. It's as simple as that. Because as soon as you go through a losing spell, which is inevitable, as we said earlier on, that's it. You're off. You're on to your next money-making venture. Fine. And it's not for everyone. Being a 100-meter sprinter isn't for everyone either. And so how many sprinters are there out there who never make it to televised sport? And yet they're very competent, but they never make it to that top level. So I think you definitely have to have that passion. And I don't anyone who says I'm just going to do it for a few years just to do something, as a stepping stone to something else, I wouldn't expect them to be successful at it as an endeavor, because they are the same people who are going to be less forgiving when the market, is doing what it's doing. So for me, what drives me after all of these years, well, one is my main account, as I always say, is my pension. So, I've got my old company pensions, but I talk about my trading capital. That's my pension. So I'm doing what everyone else does. I'm hustling. I've got a job. That's my job, to provide my pension ultimately. And along the way as well, it's part of my life. Is trading and creating money from trading. But ultimately, I'm trading that pot of money for when I decide to just sit back. So that's a driver for me. But it still has to be more than just the money. I got into trading like everybody else for the money. I got in because I was intrigued to go on this course with this guy. But then once I got into it, it's like, oh, it's the money. Right, okay. And in my first year, I put 40,000 into an account, took it up to $250,000 and then lost a lot. Well, apart from 1,000. I think that was it. I was margined all out by the time we got to the last 1,000. So a typical trader story, really. You're a beginner, you don't know what you're doing. If I hadn't have grown a passion for it, I'd have just walked away there and then. And even to this day, it's the mental challenge for me, which is so, so important. That's why I don't trade what I call vanilla trades anymore. So a vanilla trade, what I said earlier on, is just buy here. You've got a target up here. Let's say it's a 1 to 2 risk reward or whatever it might be. You're in, out, move the stop up a little bit. That's a vanilla trade. I want those trades that are going to push me mentally, because that's what I'm in it for. It's not just the money. The money is the byproduct of the endeavor that I'm doing, which I really enjoy. So. But along that, it's a bit like playing chess. I need to be mentally stimulated. Vanilla trades don't mentally stimulate me anymore. They would have done when I started and in the early years, But as the years went by, they didn't. So I found a way to still keep that stimulus there. So coming back to your point, God, I'm still doing battle with the market like everyone else is every week, every month of the year. I actually, right now, at the point of this recording, I'm in a drawdown right now.
Really?
So, it happens to all of us. My biggest drawdown was 2018. Who would have thought that? You're how many years into my, nearly, 20 years into my trading at that point. And then I go and have my biggest drawdown. So how's that? And so you never know what's around the corner as a trader. And that's coming back to what you said. That's what also is what makes it such an amazing thing, because it's ever evolving. It's ever changing. Just when you think you've cracked it, the market's going to, hammer you. And 2018 was my biggest drawdown. I've traded through, I have so many drawdowns. But you just get better at dealing with trading out of drawdowns. And
how did you handle that one, though? Because it's a good point you made, like after so long to then have the biggest one. Like, what was your mindset like at that point?
It was about an 8-month period from peak to trough.
Okay.
But that was peak to trough, but it was 12 months, just over 12 months before I went to new equity highs. So basically what happened was, it was in the October, I think it was, of 2018 that I started going to drawdown. My equity on my accounts, because I trade different accounts, like I'm sure you do, across all the accounts, because I've got certain accounts more highly geared and others more conservative. But they all equity, because I'm taking the same trades essentially, bottomed in the April. So what's that, 7 months. But I downsize. So I position size down, because I'm like, right, okay, this is the biggest, in time as well, longest time period of drawdown. So I thought, okay, well, I'll downsize. So, but then I didn't start increasing the position size. And enough, from the April onwards, I had however many straight months. Every month from the April to the end of the year were profitable months. So I could have increased the position size, but I didn't. So I was quite laid back. This is my pension money. So I'm looking after it, and I wasn't in a hurry to, I've got to get to new equity highs. So, how did I deal with it? It was £180,000 in total across my accounts as a drawdown. And I'll never forget, I was out with my wife this night with friends, and like you, most of my friends, once they get to know, that's just what Charlie does, they don't ask me about my trading, because they're like, what happened in the market? Unless we go into a bear market, then they're like, Charlie, what's going on in the markets right now?
You got the answers.
Yeah, because they want confirmation that their pension fund's going to be okay, and whatever, and their investments. But generally speaking, they don't tend to ask me, because it's just what Charlie does. And but this given night, Steve, who we were out with dinner with his wife, said, how's the markets at the moment? I went, down 180,000 at the moment. I'm having the biggest drawdown I've ever had. And his jaw dropped. Are you okay? And my wife turned to me, well, you haven't told me this. And I said, well, I don't tell you anything about when it comes to trading, because if I tell her about the good times, then she'll just want to then go and spend it. So I just don't tell her anything. And I think being open and honest about it, and so rather than just internalizing it, if I didn't talk to anyone about it, but I'm still 21 years into my trading at that point, but I just brushed it aside as, wow, it's that coming back to what you said earlier on, I do exactly this, gamify it. It's just the market trying to get at me. The market's, trying to find a way. Back to what we were saying about the market wizards. Yeah. You trust in your approach. Basically, what was going on in the markets, I was trading a choppy market. Simple as that. And I was continuing to trade. It was euro dollar at the time. You go and look at a weekly chart of euro dollar from late 2018 into 2019. It was like up one week, down the next, up. And I was just getting chopped. But I knew the analysis overall, my analysis overall when I'm trading markets, I know it will come back in. So all I've got to do is manage my risk, and I know it'll all kick back in at some point. I've just got to have patience. Yeah. Patience is another trait that a lot of traders seem to lack. It's tough.
100%. Yeah. No, 100%. I think time horizon, as you mentioned about, say, 1,000 trades, that's one thing I try and point out to people is that if your goal is, let's say if you only want to trade the next 10 years, just the next 10 years, what's the reality of you having a losing month in 10 years?
Yeah.
Right? You're going to have one. At the very least, you're going to have one.
Yeah.
You know, a quarter, you're probably going to have one. You
Yeah.
know, like, or even a year. Like, you might even have one, right? And I try and paint the picture of, like, just look at the reality of that amount of time. Like, we're so used to, I think, you know, sort of like a month feeling like a long time. When in reality, in the grand scheme, and we're not kind of ingrained to think in that way. Yeah. So I think trading kind of can help if you start to try. But even generally in your day-to-day life, thinking long-term can really be very helpful. And that's something I try and point out to people. And one thing I want to sort of come back to as well in terms of strategy, swing trading. Like, what sort of approach do you go with? Like, are you technical-based, fundamental-based, mixture of the two? You know, what sort of technicals are you looking at if it is technical?
But before I answer that, what you just said there about, you know, a month being, you know, when you're in the middle of it, it's a long time.
Yeah.
And so again, from a mindset perspective, I would always say to that trader, when you're in a period like that, project yourself 6 months in the future, looking back at where you are right now. Because if you do that if they're a new trader, they don't have the experience to draw upon. But if you've got someone who's been trading for a few years and say, right, go back and just look at when you previously had a period like this, and look where you are now. You've come out the other side, and because as humans we very quickly forget all of that, and so I always say, project yourself forwards, looking back this month or 2 months, whatever it is that's choppy, whatever. The markets always sort themselves out, so you just got to be there for when they do. From a trading style perspective, I do a top-down technical approach. So because I'm trading over longer periods, I'm going out to quarterly charts. So I'll start off with a quarterly, monthly, weekly, daily. But I'm still looking at intraday as well. So even though I'm taking I'm looking for swing trades, which I might be in for multi-weeks or longer, I might still get in off of an hourly chart, you know, after a major news event. So it could be, for example, a CPI, big US CPI event, and the markets have reacted. I'll let that reaction happen and then settle, and then I might start then accumulating a position on the back of that. So I'll still be looking at the intraday charts, but it's just that the analysis as a whole is already there. So, okay, the analysis is, right, I want to be long.
Yeah.
You know, okay, so then I'm looking for the usual things. I'm looking for support. I'm looking for, you know, support in the market, wherever the market is at that point, or whether it's got to come down further or whatever. So I'm looking for these levels in the market. Quite a lot of the time, if I'm buying a pullback, there's only so many ways you can buy or sell the market. You're either buying pullbacks or you're buying breakouts, essentially. You know. So if I'm buying a pullback, I'll then go down to a smaller time frame quite often and look for a divergence on a smaller time frame. So I know we're into a key support zone or demand zone or liquidity zone, whatever your viewers want to call it. It's all the same thing. And then I'll be looking for a positive divergence kicking in. Now, I don't always have that, but that's one of you're asking what sort of things do I use. So top-down approach, technical analysis, basically, are we making higher highs and all of that sort of stuff, high lows, just trend lines, channels, basic technical analysis straight out of the book. And then really when I've got some more specific entry techniques that I use, which are just personal to me. They're just, as you know, trading is a personal endeavor. And so we all find little things that we like. So I do like divergences. Some of my biggest ever trades have started from a divergence. But I will buy breakouts as well, depending on what that market's doing. So if I can get in off of a pullback, and start accumulating a position here, then basically when I'm looking to add into the trade, then as price comes up, as it reaches another milestone level, then I'll then say, right, okay, if I've got a confirmation that it's done enough, now I'll add more in, I can move my stop up, etc., etc. So, but I'm taking into consideration market sentiment as well, and there are times when sentiment is at extremes. So, a good example of that would be 2022, the October lows in 2022 in the currencies against the dollar. Also, it was around that time that the S&P and the stock markets bottomed. I think it was that sort of time. So the euro dollar at that time had come all the way down to sub parity. It come down to like 95.5 against the dollar. That was a historical level. So again, some technical level going back to 2002. So with the euro, when it started trading, people could trade it, was in 2002. So that was a historic level at not around 95.5, 96 at that point. And of course, a lot of the people at that point, from a sentiment perspective, were all saying, well, that's it, the euro's done. It's the whole Eurozone project, or as far as the euro's concerned, that's it, it's over. And I'm going to take that as a contrarian signal. So I want to see that sort of stuff. So I was trading the euro dollar a lot on the downside that year in 2022. But as we came down into that zone, I knew that that was where I was going to need to be looking, at least for the opposite. And of course, we start getting headline stories in Bloomberg Business Week saying that's it, the dollar's a wrecking ball and nothing's going to get in its way. I'm thinking, yes, this is brilliant as a contrarian signal. So I'll use sentiment. I'll use sentiment from Bloomberg, from Reuters, all the Economist magazine, all the big publications. I'll look at that. I do look at retail sentiment as well, but that's a little bit different. But there are times when that's useful. And of course, when I'm looking at stock markets, option sentiment and various other things. So technical analysis, sentiment, and for me, yes, fundamental news events are important. Mm-hmm. So what I find though is that at the time, sometimes I'm not always going contrarian, against, I was in that euro, just a few days after it had made that bottom. I'm not always trying to catch a bottom just after it's happened. But what's interesting fundamentally is the fundamentals never support that best trade. Mm. I remember trading January 2017, euro dollar, right just off of its lows, and it started coming up and it had a 1,000, 1,200 pip run to the upside through to 2018. And the fundamentals don't support it at that point. The fundamentals support the euro dollar carrying on going down. Mm-hmm. So I'm fighting at that point that even though I know I've got all these flashing signs, which I can sit here now in 2024 and say, oh yeah, there was this, all these headline magazines and stuff. But in the moment, it's still uncomfortable. It's an uncomfortable trade to take that contrarian, even though I've got technical analysis, which is loads of divergences telling me you got to buy this. And from a sentiment perspective, everything's talking trash to the euro or talking up the dollar. And from a fundamental perspective, it doesn't make sense either. The US economy is doing better, blah, blah, blah. And yet those so often do end up becoming the best trade. So it's tough. That
gut feeling, that intuition, that experience, sort of playing its factor because you've seen it happen over and over.
Well, I mean,
even then it's
technical. It's technical. There's a plan here. There's technical analysis and all that, but you're going against the trend at that moment in time, and it doesn't feel comfortable. Mm-hmm. So your gut is saying, I don't want to do this. And I've got to then start talking out loud. Yeah, but if you don't take this trade, will you be upset? And all of that stuff. So that's just a couple of examples there, but from I am taking into consideration the fundamentals as well. Yeah. More so from a news event perspective. Central banks news. Obviously, inflation has been a big story over the last 18 months. And one thing I say to traders is, over the last 18 months or more, inflation has been the story. In 2 years' time, it won't be. It'll be something else. Yeah. We won't all be worrying about CPI reports in 2 years' time, I doubt.
As a swing trader, how many sort of pairs or asset classes do you look over and trade?
One.
Just one?
No, slight exaggeration. But I would say that I trade euro-dollar. 80% of my trading is euro-dollar. I've always been the same. Back in the early 2000s, early to mid-2000s, it was S&P. So right the way through to the end of the financial crisis, I was trading 80% of my trading was probably, or 70, 80% was S&P. I still trade the S&P, but again, you just, change. You evolve as a trader. So I'm trading the euro at the moment. It's the world's biggest, most liquid currency pair. So I like it for that reason. But it's not to say that cable's not highly liquid and not, So, but I've got a load of analysis on it, and that analysis I don't see as completing for the next probably 2 years or so. So I'll continue trading it. But I look at all the major currency pairs. I look at S&P, NASDAQ. I will trade those. Now and again, I'll trade gold or silver. I own silver and gold, but it's quite limited. So it's less. It's about 10. So 6 currency pairs, and I'm monitoring US stock markets, gold and silver and oil, because of their interrelationships as much as anything. I'm not just going to be blinkered and just trading a pattern on a euro dollar without seeing what's going on with Aussie, Kiwi, cable, dollar, yen. It's all of the intermarket analysis as well. That forms part of it.
In terms of the changes in the markets that you've been and see, not only market environments, we've talked about that, but also the changes in just the space as a whole. Like social media has come about. You got all these social media traders that have come about, which have some may be positive, some may be negative. But also changes in like the trader's mindset, I would say, has also come from different platforms or things that people can use, from funding companies to different types of brokers offering different styles of leverage and so on and so forth. What are your thoughts when you observe the space and how it's changed and molded over time? Is there anything that comes to mind in terms of, like, do you have any opinion on it? Or
not especially, actually. You thought I might do, but I think, of course it's changed, but you just change with it. So it's only when someone asks me, oh, what was it like trading in 2002? Then I have to think, I'm not really thinking back to what it was like then, or 1999 or whatever, just before the dot-com crash, and all of that. So most of the time I think that, okay, to pick a couple of examples, you talked about social media. Well, yes, it's huge by comparison to what we had in 2000. We had the internet, yes, but like I said earlier on, most information was not freely shared. You had a few bulletin boards at the time, but there would have been, but there wasn't a lot. And so by comparison now, the free information that's available on YouTube, TikTok, you name it. So yes, it's evolved, but they're the same operators. We still had operators like that back then, but they used to put adverts in newspapers and all that sort of stuff. So it's become more available to more operators, but the same messages are still there. So I think that's the same. As far as brokers are concerned, brokers have had to evolve because it's a very competitive space, as you know. And so years ago, they didn't give their customers many tools freely available. Most of all these tools that they have nowadays, you used to have to pay for. Years ago, I was paying thousands of pounds in charting software years ago. And of course, these are the things that have changed, where you can get really good quality charts for either for free or for relatively low, if certain, I'm sure charting providers that we could talk about. But so the costs of the barriers to entry financially are a lot lower. Years ago, I was spending 15-20 grand a month on stuff for periods. Wow. Yeah. So information and whatever, but you just don't need it now. So I do think, yes, brokers are doing more for their customers now than they ever have done. And so whereas it wasn't that long ago, they were interested in is rinsing their customers because they knew that, well, those 10 customers that leave this week or today, there's another 10 customers coming in. They've realized that, one, regulations have changed and a lot harder on market maker type brokers, but also that they need to nurture those clients as much as possible because the cost of acquisition is high and they can't afford to lose those customers. So the game's changed a lot. And of course, as you said, in recent years, we got funded account programs. So that's changed the game again. I think that needs more regulation because what we've seen with my FX funds and whatever it was, my Forex funds, wasn't it? And others. But I think that's coming anyway, isn't it? I'm not really in that space, but so I think that can only be a positive in that space.
Do you think, in terms of the funding companies concept, do you think it's a positive thing for traders? Like, because the reason I asked that is, like you said, when you started, you put £40,000 into an account.
Yeah,
and I feel like back then, if you wanted to be a trader, you probably had to have capital.
Yep.
Right. While nowadays, someone who's in debt essentially could find a way to put money into an account or buy a funding program. But equally, off the back of that, they could change their lives if they have the skill set. Obviously, the skill set, the discipline, everything else we've talked about so far has to be there for that to happen. But, so it's a great opportunity, in my opinion, it's a great opportunity, but only in the right hands. Like, what are your thoughts in terms of these new concepts and these possibilities that are open?
Well, like I said, I'm not really in that space. Mm-hmm. So you're going to have to take what I'm about to say with, a pinch of salt, because I'm going to comment on what I saw in the funded account space 2 or 3 years ago. Mm-hmm. And I know it's moved a lot since then. But what I saw from the back end was, as they would charge challenge account fee. One of them was very honest about the amount of people. I think it was something like 94% of people would fail the challenge of that given one. And then of the 6% that would get through, of course, half of them would disappear once, even though they've got through, then they'd still end up losing at some point or whatever. So it was a very small number of people who are actually getting through and being able to continue it and making money with it. And from the back end, yes, I've spoken to people who were at some of these funded account companies, and they would do the sort of things that normal brokers were doing, 20 years ago, widening spreads excessively in order to try and stop people out and all of that, because if they stop you out, then you've got to start again, challenge and all of that. So that's what I saw of it a few years ago, but I think it's cleaned. I think there's definitely firms that have, that have seen what some of those early firms were doing and realized that, again, that's not going to have legs. That's a shorter term, probably business model. Yeah. And so there'll be better firms out there. So I think it's, as a concept, I think it's a great concept. It's where the brokerage industry was back in the late 90s as CFDs emerged and spread betting here in the UK, all new concepts and stuff. Mm-hmm. This is just another new concept now.
Just needs time to mature.
Yeah, yeah. And so I think as long as people go in with their eyes wide, I mean, I don't know all the deals that they have now. Yeah. But I think they've still got to see it as, it's not a holy grail, but certainly if you haven't got the funds, then it's a great way in. Mm-hmm. Yeah.
And to finish off, like, what would be, if you to take all your experience, as well as like your experience of all the traders you've met, especially the newbie traders as well, like, what would be the one thing, if you could point to one thing? Obviously, we know there's loads more than just one. But if there's one really important thing to you that you think traders should focus on, what would that be and why?
Well, I'm always going to come back to it. It's not the technicals. Mm-hmm. It's mindset. For me, most people, myself included, when I got into trading, I remember even thinking, oh yeah, I know there's this psychology stuff, but I'm going to focus on, once I've learned all this, I'm profitable as a trader, then I'll go and learn that. But the two are, there's a synergy going on here. Mm-hmm. You can't have one without the other, not for any length of time. So for me, yes, you have to learn the technicals, but ultimately the mindset element is probably 80 to 90% of what you are going to do as a trader. So stop chasing holy grail trading strategies and trading methods. Keep it simple. Don't try and go send yourself down rabbit holes after rabbit holes trying to chase the latest thing. Mm-hmm. Get something, keep it that you think that can work. Keep it simple and focus on that mindset. That, together with your approach, is what will make you a profitable trader, not chasing the next hot thing.
I love that. Charlie, it's been an absolute pleasure. I know we probably could have kept going for probably
Yeah.
a couple of hours, maybe.
Yeah.
But I know we're in a sauna as well.
Yeah.
People won't realize.
Hot,
So
yeah.
I appreciate it a lot. And hopefully in the future, we'll be able to do maybe a round table or do a
Yeah.
part 2 at some point. But everyone at home, drop a comment of your biggest takeaway from this episode. The links for Charlie will be in the description below, so make sure you check him out as well. On screen here, there will be the day trading show and past episodes, so check them out. And make sure you hit subscribe. Until next time, take care.